Welcome to this week's Pirls Stock Market Commentary video featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart for November 13th, 2013. Market Breadth. With this past week's market advance, our Bull Bear Point and Figure ratio at 1.21 rose from 0.57 last week, moving back into bullish territory. The total count of securities in bullish or bearish patterns decreased 5% to 3,123. The count of bearish stocks decreased 33%, while the count of stocks in bullish patterns increased 44%. The Pirls P&F Market Breadth Summary Chart shows us a market now 1 week in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. In order to receive the weekly email version of the Pirls Stock Market Commentary free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 302 points for the second advance in 15 weeks. At a negative 421.55 points, it continues below all 5 tops above plus 100, has risen above the August 2014 bottom, and continues below all 4 remaining bottoms below minus 100 in the last 3 years. Volume Analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum, now at a positive 22.13, with 3 days above zero, up from a negative 204.49 a week ago. The daily CCI20 in a Woody's downtrend at Monday 11/7 close completed the Woody's CCI20 daily zero line reject short trade begun at Tuesday 10/25 close. The result of this trade simulation was a gain of 101.41 points on the Nasdaq, or $2.19 per share of QQQ. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI20 of the Nasdaq Composite Index began a Woody's uptrend 28 weeks ago, while the daily CCI20 began a Woody's downtrend 3 weeks ago. The CCI20 weekly has risen to a positive 37.71 from a negative 25.50 last week, presenting a Woody's zero line reject long entry signal within the plus or minus 50 range at Friday 11/11 close. We will follow the results of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: banks, brokers, and some tech on top. Gold and silver, some tech, and REITs on the bottom. Bullish: KBW Bank, networkers, and disk drives continue in the top 5. Brokers has entered the top 5. Oil services has left the bottom 5. Gold and silver has left the top 5, has entered and leads the bottom 5. S&P retail has left the bottom 5. Bearish REITs continues in the bottom 5. Comp Tech has entered the bottom 5. Focus this week from www.zerohedge.com. Forget Hindenburg, stocks just suffered the Akron Omen via Dana Lyons's Tumblr. The following are some key points. There is an infamous market indicator ominously called the Hindenburg Omen, and while there are several criteria involved in the HO, the main concept deals with large numbers of new highs and new lows at a given time. And although the HO is the object of plenty of Wall Street ridicule, that can probably partially be attributed to its eccentric name. Because when you dig into at least the concept behind the HO, which we have, there is a lot of evidence pointing to its validation. Both the number of new highs and new lows set 3-month highs yesterday. If that sounds odd, in fact, it was only the second day ever in which each set a 3-month high. And since 1970, only 18 prior days saw new highs and new lows set as much as a 1-month high. As with the Hindenburg Omen and our Wednesday's look at the Junky Marker, that is too many highs and lows, the stock market has generally not fared too well in the intermediate term following these instances. It hasn't been unanimous. Some of the occurrences in the mid-80s and mid-90s saw the market keep moving higher without a hiccup. However, below average returns were certainly the norm. As the next data point shows, the level of new highs and new lows is elevated on an absolute basis as well. To wit, yesterday saw both the number of NYSE new highs and new lows account for more than 5% of all issues traded. That is another rare occurrence, with just 11 precedents since 1970. As one can see on the chart, all of the prior instances occurred in fairly close proximity to cyclical market tops. FYI, the blimp mentioned is the USS Akron, since we understand and share the aversion to alarmist market language. We've come to call the 5% new high, new low signal mentioned here the Akron Omen. It sounds less sinister than the Hindenburg Omen, although it still denotes caution, and it pays respect to a lesser-known disaster. The USS Akron was a U.S. Navy helium-filled airship that crashed in April 1933, killing 73 airmen, twice the number of Hindenburg casualties. At the time, it was the greatest loss of life of any airship crash. It also is an appropriate way to remember our servicemen and women on this Veterans Day. Thank you to all who have served. And thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you did indeed have a pleasant Veterans Day, hoping that you will enjoy a prosperous and productive week coming up. Congratulations on obtaining a new president-elect. And as always, wishing you true success.